Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for this video where I'll be talking about imbalances and sort of the differences when you make adjustments of your imbalance percentage. Now, before I jump in, if you've been enjoying these videos, be sure to subscribe to the channel, click the notification bell so you don't miss any new upload. And if you find today's video helpful, hit the like button before me, and be sure to leave a comment sharing your biggest takeaway. I love hearing your feedback because today's video is based off of a user question. So your support really does go a long way in helping me create more content just like this. So again, if you're getting value from my channel, be sure to subscribe, and that way you won't miss any new videos. So let's go ahead and get started with today's topic. Okay, so Solomon Israel 2256 wrote, Sir, please, do you use 300% imbalances different when trading any market, be it crypto, on any time? Or do you change the imbalance percentage when using different time frame? No, I don't make any changes. Now, sometimes people, they watch my videos or see my, my trainings, and I show different types of charts, different time frames. I show range-based charts. I show a 1-minute chart, a 30-second chart, etc. And they think, oh my gosh, I got to use all these different charts. No, you don't. I use it to show you that, the order flow analysis transfers from one market to another, and it doesn't matter what type of chart you're using for the most part, right? As long as you got some usable data, then you can start making trading decisions. Now, when it comes to imbalances, I keep mine at 4-to-1, which is 400%. 300% would be 3-to-1. So let's just open up the order flow trader software. So you see here, imbalance trigger in percent is set to 400. Now, in thinner markets, okay, so this is a gold 8 range chart, okay, and you're not getting tons and tons of volume, right? Most volume at a level is somewhere between 20 to 50, okay, and if you're looking at another market, call it 10 years. Okay, 10 years, I like to use a 4 range chart, so talking about jumping around charts. But just really quick, just to give you an idea, okay, most of these imbalances that you see, whether you're using 400% or 300%, are still going to be there, okay? 235 against 7,000 is much more than 400%, much more than 4-to-1. 75 against 3,200 is much more than 4-to-1. Where it's going to get a little bit trickier, of course, is on some of these volumes that are a little bit closer. So if I was using 3-to-1, right, 300%, I might get 1 or 2 extra. I mean, this would probably be a buying imbalance right here, 371 against 1257, okay, right here. But at 4-to-1, it's not. So a good way to compare, let's just do this. I will open up another footprint and put it on the bottom. I'll make it 300 and just make sure I got it popping in the right place here. I'll do it as a new panel down here. Make sure. I want to turn off some of these things so not everything is going off at once. I don't want to just keep it clean here for you guys. That way it's easier to compare. Keep it a simple footprint. I'll keep that there. Don't need that. Don't need this. And it's easier to compare this way by looking at it on the same screen. Hopefully this will work. So I got 2 footprints, one on top, one underneath. Okay. See, the one on top up here is set to 400%. The one down here is set to 300%. Okay. And turn off those ratios. Again, I don't want those extra colors confusing anybody here. So let me just make one quick change. Let's disable the ratios there. So just bear with me here, and here we go. Okay, so you still have this imbalance, but now you've got a buying imbalance here. Okay, on the way up, Here you've got 171 against 611. This is still this bar is still the same. This bar is still the same. You do have that buying imbalance here. Got an extra imbalance in here. This is still the same. Here you got two buying imbalances. Here you've got an extra selling imbalance. Here you've got an extra selling imbalance. Extra selling imbalance. Same, same, same. This bar is the same here. This bar is the same. This bar is the same. So you do have a few extra, you know, some of these that were a bit borderline. Okay. Obviously, this one here, the 611. This bar is the same. This bar is the same. This bar is the same. One extra here. This bar is the same. Buying imbalance here. Same bar, an extra buying imbalance. An extra right here, 2889 against this. But other than that, so you got one extra here. You got two extra in this bar, actually. Two here. You got another one here, another selling imbalance. So, you know, you are, in generally speaking, most of these bars are the same, except for, you know, 1, 2, 3, 4, 5. That's about it. Okay, but if you're on a different type of market, right? So let's go to change that back to that, but then we'll make it a gold chart. Okay. Now, since the gold chart, right, has, you know, the volumes are a bit lighter, right? I just find you're going to see more imbalances. Okay, so just really quick, you know, just taking it from this bar right here. Here you've got one extra. This bar is the same. Got an extra one. This bar is the same. An extra one in here. Same. Extra one. Same. Same. Now you've got a stacked imbalance appearing in here. Here you've got a few more. That's the same. More in here. You got 4 now. Here's when you only had 3. You got an extra imbalance here. Got an extra buying imbalance here. Got an extra buying imbalance. So you can see what the differences are there, right? Again, do you want more or do you want less? I just find, you know, if I was looking at, you know, this on a, and this is a range-based chart, if I was looking at on a minute-based chart, curious how it's going to look here as well, right? So here we got 3 buying imbalances. Okay, starting, well, let's go from the low. Same, selling imbalance, extra. You got an extra selling imbalance, same. Got an extra buying imbalance, same. Got an extra buying imbalance, same. Got an extra selling imbalance, same. Extra selling imbalance, same. Extra selling imbalance, extra buying imbalance, same. Extra selling imbalance, same. Extra selling imbalance, same. Extra selling buying imbalance, same. Extra buying imbalance, same. Extra selling imbalance, extra selling imbalance, same. These two are the same. Extra buying imbalance, extra selling imbalance, same. Extra selling imbalance. So you see on a shorter market that trades a bit thinner volume, you're getting more. That's part of, you know, the market dynamics of thinner markets. Okay, so, and again, you know, I have it set at 10 as a minimum volume threshold here. Okay, so minimum imbalance volume, I like to set it at 10, because if I don't set it at 10, 7 against 0, this is going to be a selling imbalance, but it's only 7 contracts, right? Which to me isn't really enough to, you know, to get excited about, right? I want it to be at least 10, 8 against 2, that would be a sell and a balance, but it's not above 10. 0 against 9, it's not above 10. So in my opinion, it's best to have those lines in the sand drawn, okay? But you can see here, right, an extra sell and a balance coming in here, right? It can make a difference, can make a big difference for, some traders, depending on the market that you're trading. But honestly, what it comes down to is find out what you're comfortable with. Okay, I'm perfectly comfortable with 4 to 1. 3 to 1, it's a bit weaker. 5 to 1 would be stronger, of course. If I went to 5 to 1, I'd have fewer imbalances. So let's change this bottom one to 5 to 1. Okay, so from 300, change it to 500. Again, it doesn't matter what you're using, whether it's 3 to 1, 4 to 1, 5 to 1, 10 to 1, 100 to 1. Stick with it, right? And work your way through the market. Trade the market with that. Be consistent. You don't have to keep changing it. So at 5 to 1, this bar has 1 less sell and a balance. This has no sell and a balances. Here you got 2. This bar is the same. This bar, you don't have that sell and a balance. This bar is the same, the same, the same, the same, 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 same. 1 less sell and a balance, 1 less sell and a balance. No sell and imbalances here. Okay, same, 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 same. No sell and a balance here. So again, I know some people that like to use 9 to 1. Okay, if at 9 to 1, there's going to be even fewer imbalances. Except for the ones that just really stick out. Oops, I changed the top one here. I was going to say, why is this imbalance here? I know that's not an imbalance. So the top one, I'll make that back to 400, which is my usual one. The one on the bottom, we'll make 9 to 1. Sorry about that. I don't want to confuse anyone. But really, it's just about finding the level you're comfortable with and being consistent with it. So 4 to 1 on top, 9 to 1 on the bottom. Okay, no imbalances down here at 9 to 1. Just that one buying imbalance. No imbalances. Just the 2 buying imbalances. Same, nothing, right? This one's got a selling imbalance at 4 to 1. It's not here. This bar is the same. This bar, you don't have any imbalances. Up here, you got 1 buying and 2 selling. This bar's got no imbalances. This bar's got only 1, but up here's got 2, right? This bar's the same, same, no imbalance here, etc. Okay, so you can see here you got 3, here you got 1, here you got 1, up here you got 2. So the point I guess I'm trying to make is decide on what you want to use. If you're at 9 to 1, you're getting a lot fewer imbalances, obviously, because it's much more stricter. 3 to 1, you're going to get more. Now, does that mean you're going to get 3 times as many more? No, but you're just going to get more. 3 to 1, 4 to 1. I don't want to say it's irrelevant, but it really just comes down to what you're comfortable with. The guys that you put out in Noft, right? The old Ninja Orderflow trader from Ninjacators, they use 3 to 1. They're fine with it. They've been using that for a decade. I use 4 to 1. I'm fine with it. At the end of the day, it just comes down to what you're comfortable with. Obviously, at 3 to 1, you're going to get more imbalances than at 4 to 1. But you don't need to keep changing it, adjusting it on a market-by-market basis. You just find your comfort zone and stick with it. That's all. That's all you got to do. Find your comfort zone. That's a lot about what trading is about, is finding your comfort zone, finding your wheelhouse. I see a lot of traders coming into the market. They pay a lot of money for a quote guru to teach them how to trade. You got to trade E-mini, NASDAQ, right? MNQ or NQ. You got to trade it like this. And then they can't because it's not suited for them. They blow up their account. They think, trading is, it's a bunch of crooks out there. That's going to be further from the truth. It's just really finding what suits you as a trader and go with it. All right. So I'll end that video, the topic on imbalances on that note. So I hope you found these tips helpful for your understanding of order flow and imbalance levels. Let me know what you'd like to discuss next by leaving a comment down below. And if you enjoyed this video, be sure to subscribe to my channel so you don't miss any new upcoming content that I got coming out. And I'll see you guys on the next video. Take care.